What's the worst real estate investing experience you've ever had?
I would say it had to do with being a bit over leveraged when the market turned. So my worst real estate investing experience came in 2015 into 2016 when the Alberta market hit a bit of a roadblock. Back in those days, the price of oil plummeted. The rental market in Alberta went in a huge decline. And we were in a position where the market was really going up quickly. 2012, 13, 14, we were buying multifamily buildings, increasing the rents, refinancing, and then taking those refinance funds and reinvesting it into more buildings. So we were feeling pretty good because one building turned into two, turned into four, turned into eight, and we were making hundreds of thousands of dollars of gains in the portfolio on paper, which was terrific. And then all of a sudden the market slowed down, and it felt like a bit of a game of musical chairs that stopped at the wrong time for us because we had our primary mortgages with, at that time, 2.5% interest. And then we had a bunch of second mortgages at 8 or 9% interest, which wasn't a problem because the rents were servicing that debt and it allowed us to acquire more property. But when the market stalled and the rents started going down, they went down very aggressively and they actually went down further than what we projected as our worst case scenario. So we ended up being in a position where we were getting hit with a bit of a double whammy because the value of the building is tied to the rent. So when the rent goes down, the value of the building goes down, which made it tricky for us to sell them to extract enough equity to pay off some of these second mortgages. So we ended up having to feed the buildings for a couple of years, which was no fun at all. And that was a lesson in just being a little bit more cautious with and respectful of leverage. It's always fun to think about buying buildings with no money down, other people's money, vendor financing, all of these things. Those strategies work great when the market goes up, but the market doesn't always go up. And so we kind of got caught a little bit overextended. And here we are in 2023 and everything's worked itself out, but made for a pretty tough couple of years there. So, my big takeaway is it seems like a good idea to take on leverage if you're 1000% sure the market's only going to go up, but leverage can hurt really badly in the other direction if the market declines for a little bit in the short term. And I think we're going to, at the time of this recording in 2023 into 2024, we're going to see a lot of people getting caught with that too, because first mortgage interest is very high right now. And people coming for renewals who might have seconds, lines of credit, people who've used lines of credit on down payments where they're close to 100% financed. The cost of that financing has gotten way more expensive and the rents are catching up, but they haven't caught up yet. So, this is a time where now my portfolio, I'm not overextended because of the lessons I learned back in 2014, 15, 16. And, we're going to be able to ride out this interest rate environment. But that was the toughest time in my career, was just realizing that myself and my partners had to pour a ton of capital into those properties to keep them floating while we got through the dip in rents.
But the worst experience that I had, it actually happened recently, which is very interesting. So as you guys probably know, I used to have a wholesaling company. I used to do flips, and for the deals that we liked, we simply hold on to them. So we had a long game and the short game. We're making money, on the short time frame. So every single week, we'll have a different project. We could just dispose it very easily and make a quick buck, right? But when it comes to, the long term, we're able to hold on to properties. We're able to continue building up our net worth. So I would say, before we're really well balanced in that sense. But over the past year and a half, we hadn't made a single dollar when it comes to, active income. We were very much focused on building our self-storage portfolio. And the only income that we could get is from charging a small acquisition fee or a management fee. And obviously a passive income from our portfolio. So that has created so much financial distress because every single month, it just feels like we're burning cash, right? Money is going out and we're not getting any money back in. So I think for anyone that's looking to build out their real estate empire, instead of just, unless you have a W-2 or a T4 income job, you have to worry about how to make that short-term cash, right? Either through wholesaling, flipping, coaching, or doing Airbnbs. Anything that can really help you achieve, a cash and a revenue on a shorter time frame, instead of just focusing on the long. So that's actually single-handedly really create a lot of stress between me and my wife, right? The relationship that we have, it's not the same anymore. And it's really closed so many doors for us. Like there's so many opportunities that we usually jump on, but because we don't have the liquidity as we did before, we're not able to jump on that. So I'll definitely say, everyone that's listening, take this as a lesson to focus on, long-term net worth, but also at the same time, short-term revenue as well.
Okay. So with all these, there's a bunch of them, right? There's always stuff that never doesn't go quite to plan, especially if you're like me and you do a lot of projects. There's always stuff that goes out of plan. So I thought about this a lot, and the one that really came to my mind was a project that I bought. I think it's like a year and a half ago or something like that, right? So what happened? I found a property and I found a joint venture. Actually, backwards. I found the joint venture first because we were doing another project and it fell through. So then we had to find another project to do this, which is normally the opposite way as I usually do this. I usually find the project first. Anyway, we got this project. It was a duplex in Indianapolis, and it looked like a really good deal. It looked like the rents were really high. The price of the property was really low. And I was like, it looked like a home run. So I proposed it to the joint venture. They didn't have enough money. We didn't have enough money to pull this off as a cash deal, which I usually like to do, work in cash for the renovation. And what we came up with is, instead of doing it as a cash deal, we were going to do it where we just buy it with financing right from the start. And what we would do is as we made the cash flow, we would fix the property up with that time, because it also needed a bunch of work. So we did an appraisal. The appraisal came in terribly to the point that the lender, it was like at half of what we thought it would be. And the lender said they weren't even interested in lending on it because it came in that much lower than the underwriting and everything else. But we took the appraisal back to the seller, renegotiated the price, because we're like, this isn't us. This is a third party that's determined that this is what the value is. And we renegotiated the property to be half the price. So I think in your heads, you're going, this sounds like a win, not a loss. Don't worry, it's coming. It's coming. So anyway, we have barely enough money to pull this thing off in cash. So it's just because we've renegotiated the price right down to what the joint venture had. So we don't have any extra money. So we closed on the property, and also, big mistake, we closed on the first of the month. So the tenants are saying, we paid the previous landlord, and we're going, no, you're supposed to pay us. And we contact the previous landlord, and they're saying, no, we never got any money. They're lying to you. So in Indiana, you can do an eviction right away, right? So without cause. So we evicted the tenants because they hadn't paid their rent. Long story short, it was a nightmare. It shaved years off of my life to get to the end. In the end, we didn't actually lose money, but we didn't make nothing close to what we were expecting. We ended up selling the property once we got it stabilized, because then it was attractive to buyers, but it wasn't even much of a profit. Like, after you think of the realtors and all the fees and everything else, we made a little bit. But even still, if you're thinking like, Glenn, that was for a worse story, honestly, it was really bad. But I've never lost money. We've done, 200 houses we've renovated. I've never lost money on any of them. But that one was really close, and it was really stressful, and everything was falling apart.
What is your best ever real estate investing experience?
My best experience was when COVID first hit and everybody panicked and the world came to a freeze. I went on a bit of a buying spree. So in January, February, I was already looking at some properties. And then March hit. Everybody thought the world was going to end. And in March, April, May of 2020, we picked up a ton of properties at really, really deep discounts. So there was a short-term dip. There were builders holding on to inventory that they thought they were never going to sell. There were infill developers completing properties with no buyers. And it didn't last very long, but it was about a 60-day window where, people were Lysol wiping their groceries and scared to leave the house. And, that was a really good time to pick up some deals. So we took advantage of a market time where when everybody else is just scared to take action, we were willing to do it and got some really, really good properties that, we bought them for about 5 to 10% less than they would have sold for 3 months before. And by the end of the year, they had almost retained their initial value, and then they kept growing into today's 2023 values.
Where were those properties? In BC or Alberta?
They were all in Alberta. Yeah, sprinkled around Edmonton. So our target was developers. We figured developers and builders were going to be a little bit more wary just because of the amount of inventory they'd have sitting. It's easier to help someone empty the shelves of properties when they've got 100, 150, 200 properties versus, one homeowner who might think, I'll try again next year. But the developers who were just overloaded on inventory were the ones who were most willing to give out the best discounts.
The best experience that we had, it was, I would say, seizing the opportunity of going to New Brunswick as a market where, I learned, I consume a lot of content, it's through reiteclub, through different podcasts, in Ontario and in the US. And I realized most of these bigger players, the investor community, they're really concentrated in these primary markets. So I wanted to take what I learned from the primary market into a market like New Brunswick. And that concept completely worked. So I was the only one applying these essentially high value strategies, such as direct mail, such as, doing billboards. I was even on TV. I did a lot of TV commercials as well. And SEO, like if you Google like real estate in Moncton, very few realtors are even doing Google ads. So my pay per click, I think it was somewhere around $1.50 to $2 versus the pay per click down in Florida. When I talk to some of my partners, they're paying $80 to $120 per click, right? So that experience, just going after a market where there's less sophistication when it comes to investors has really served us well, right? So we really got to dominate that market because we applied, everything that we knew from bigger markets into the small market. So I absolutely love that. I would say play where you can win. Really use that blue ocean strategy. So avoid the competition, go into a market where you can absolutely dominate it. Because that was our experience, and it was awesome. It was probably the best experience that we had, right? We would walk on the streets and people would recognize us for good reasons and for bad reasons as well. There's Reddit hate posts about us because we're coming from out of province. We're buying our properties. So obviously, naturally, there was a lot of hate. But at the same time, the business community, they knew us right away. They were like, oh yeah, that's the Chinese couple. That's Martin and Lynn. So, people knew us, people knew of us, and we're able to help out a lot of distressed families out of their distressed situations because we had that brand awareness. And that was simply because we're the only serious player in that market.
So this is the best story, which is also it's a successful story, but it's also, I just love this story. So we found this property. Well, I'll back up. I had a person contact me because I have a podcast, and they said, hey, Glenn, I live in Toronto. I'm moving to Alabama. I don't have a green card. I don't have a visa. I can't get a job. My husband has a job down in Alabama, but I can't do anything. I'm not legally allowed to do anything. Is there something I could do for you? And I was like, well, if you want to, when you're driving around, if you just want to let me know of properties with high grass or, something I could buy, right? I'll pay you $500 for every one that you find that I close. And she's like, awesome. This will give me something to do, right? So she started driving around and she found me this property. So she found me, gave me the address. That was it. Here's the address. Go figure it out. In these states, there's a lot of information. I go figure out who owns it. I go through the whole process and figure it out. And it turned out that it was an REO. The bank had taken back this house. No one was living in the property, and it was just sitting there. Long story short, with that whole situation, with a bank, you're actually bidding against a computer. You're not bidding against an agent or a person. It's not really a negotiation. You just have to hit the numbers to hit their computer. But anyway, I get the property. We close on the property. We start the renovations, and we contact the neighbor to buy the land, because that's the ideal situation, is to buy the land, move it over. So go to the neighbor. Well, I send over my property manager. They go to the neighbor, and the neighbor goes, hey, can we buy the land? And they said, yeah, no problem. And I said, how about $4,000? And they said, sure, no problem. Lawyer drafts up all the agreements, sends it over. She signs it, comes back to the lawyer, and they go, there's a husband and a wife that own this property or land or, you know, the house next door. You need them both to sign. So send the property manager back over. Like, we need your husband to sign. And she's like, he left to get a pack of smokes about 3 years ago, and we have not seen him. And I was like, great.